Here's everything you need to know about the CoreWeave IPO. CoreWeave is a fast-growing cloud computing startup that specializes in providing access to powerful GPUs for artificial intelligence and other intensive computing tasks. In simple terms, it rents out the high-end Nvidia chips that companies need to train AI models or render graphics through its cloud data centers. The company actually started in 2017 as a cryptocurrency mining venture before pivoting to AI cloud services as demand for AI computing exploded. CoreWeave's close relationship with Nvidia is a big part of its story. Nvidia not only supplies the chips, but also took an equity stake in CoreWeave. In fact, Nvidia even agreed to invest $250 million in CoreWeave's IPO at the offer price, underscoring its support. Thanks to the AI boom kicked off by tools like ChatGPT, CoreWeave's business has surged. Its revenue jumped roughly 7x in 2024 to nearly $1.9 billion. The flip side is that CoreWeave is spending aggressively to fuel that growth, and it hasn't turned a profit yet. But going into 2025, it had established itself as a key player in AI infrastructure. Counting giants like Microsoft and even OpenAI as customers. With that kind of momentum and backing, it's no surprise there was a lot of buzz about CoreWeave going public. CoreWeave's IPO was widely seen as a landmark moment in the tech world, potentially the first big test of investor appetite for a pure-play AI startup on the public market. Just over 2 years into the generative AI boom, CoreWeave was essentially the first startup of its kind to try an IPO, so many hoped a successful debut could kick off a wave of AI-driven IPOs. The stock market had been relatively starved for tech IPOs in recent years, and excitement around artificial intelligence was running high. In the private market, CoreWeave had already attracted top-tier investors and hefty valuations. It raised a $1.1 billion round in mid-2024 led by CoreWeave that valued at around $19 billion. And a secondary share sale last November priced it at about $23 billion. All this set the stage for CoreWeave's IPO to be a bellwether for the AI boom on Wall Street. Some analysts even speculated that in an enthusiastic market, CoreWeave's valuation could reach as high as $35 billion in its IPO. In short, expectations were sky-high that CoreWeave's public debut might reopen the IPO window for other AI-centric companies and mark the beginning of a new IPO parade in the sector. When the IPO pricing day arrived, CoreWeave got a reality check. The company had initially filed to sell 49 million shares in the offering at an expected price range of $47 to $55 each. At those levels it would have raised up to $2.7 billion and valued the company around $30 billion. But during the roadshow, demand turned out weaker than hoped. Investors grew more cautious, and CoreWeave had to downsize its IPO. In the end, they sold 37.5 million shares at $40 apiece. That cut the cash raised to about $1.5 billion, giving CoreWeave roughly a $20 billion market valuation post-IPO. In other words, the IPO priced well below the original range, a significant downgrade from the company's earlier ambitions. Why the cold feet? Several factors made investors hesitate. First, CoreWeave is heavily dependent on a few big customers for its revenue. By one estimate, just 2 clients accounted for about 77% of its sales. Having so many eggs in one basket is a classic business risk, because if a major customer, like Microsoft, pulls back on spending, CoreWeave's growth could take a hit. Second, CoreWeave's business model is capital-intensive. It costs a fortune to buy and operate all those cutting-edge GPUs in data centers. The company has amassed a large debt load to finance its expansion, and it expects to keep spending heavily to upgrade hardware every couple of years. Combine that with the fact that CoreWeave is still running big losses, and it starts to look like a risky bet to some investors. In the current market environment, many investors have been wary of unprofitable tech companies, no matter how exciting their growth story. Lastly, broader market jitters played a role. Concerns about higher interest rates and volatility, as well as questions about whether the AI frenzy might be cooling off. For example, cheaper AI offerings from overseas competitors have started to appear, made IPO buyers more risk-averse. All these issues surfaced during CoreWeave's IPO roadshow, leading the company to cut its offering size and price to get the deal done. Nvidia's step to anchor the offering with $250 million was a strong vote of confidence, but it also highlights that without that help, demand might have fallen short. In short, what was supposed to be a slam-dunk AI IPO turned into a more measured debut due to a mix of company-specific and market-wide concerns. For investors, CoreWeave's trimmed-down IPO is a reality check and a learning opportunity. It shows that even amid massive hype around AI, fundamentals still matter on Wall Street. People are undeniably excited about the potential of artificial intelligence, but that doesn't mean they'll blindly fund every AI-related company at any price. When push came to shove, investors scrutinized CoreWeave's business quality, its customer concentration, heavy spending, and lack of profits, and priced it accordingly. This cautious reception suggests that the market is becoming more selective. Companies riding the AI wave will need more than buzzwords. They'll need sustainable business models to earn investor trust. There are a few key takeaways here. 1. The era of growth at any cost may be over, even for AI darlings. Investors are looking for a path to profitability, or at least reasonable unit economics, before they jump in. 2. Diversification and stability of revenue streams matter. In CoreWeave's case, it will be important to see if they can broaden their customer base and reduce reliance on any single partner. 3. Big backing helps, but isn't everything. Nvidia's involvement undoubtedly gave CoreWeave credibility. Having the world's AI chip leader in your corner is a strong endorsement. It also means CoreWeave is deeply intertwined with Nvidia's ecosystem. However, even Nvidia's backing couldn't guarantee unbridled enthusiasm. Other institutional investors still did their own homework and set limits on what they were willing to pay. From a market perspective, CoreWeave's IPO also reflects the broader sentiment in late 2024 and early 2025. The IPO market has been slowly thawing after a deep freeze, but investor appetite remains cautious and deal-dependent. A few months ago, some hoped CoreWeave would ignite a flurry of AI IPOs. Now, with its downsized pricing, we might see other AI startups temper their expectations or even hold off going public until they can show stronger numbers. It's a reminder that the stock market, even in an exciting sector like AI, is still governed by supply and demand and rational analysis. On the flip side, the fact that CoreWeave got its IPO done and became the biggest tech listing in years indicates that there is capital available for companies with a compelling story, just at the right price. If CoreWeave had come out insisting on a $55 share price, the offering might have failed. At $40, it found enough buyers. For investors eyeing CoreWeave stock now, the lower IPO price could even be seen as an opportunity. The bar has been set more realistically. If you believe in CoreWeave's long-term vision, that demand for AI computation will keep rising and that it can manage its debt and costs, then buying at a $20 billion valuation is more attractive than at $30 billion. But it's still a speculative bet. On the other hand, if you're skeptical, CoreWeave's debut reinforces the wisdom of being picky in the AI space. Established players like Nvidia might be safer ways to ride the AI trend, whereas something like CoreWeave offers higher risk and potentially higher reward. As a pure play, CoreWeave's IPO journey provides a thoughtful reflection on where we stand in the intersection of AI innovation and public markets. The future of AI investments and IPOs will likely be a balancing act between excitement and execution. There's no doubt that AI is transforming industries and creating huge opportunities. We've seen tech giants, startups, and investors all pour into the space. That trend isn't going away. But as CoreWeave's case showed, being in a hot sector isn't a free pass to limitless investor funding. Hype can get a company in the door, but it can't close the deal without solid numbers or a convincing path forward. Investors, especially seasoned ones, have become more discerning after the volatility of recent years. Going forward, we can expect AI-driven companies to continue reaching for the public markets, but they'll need to prove themselves. In the wake of CoreWeave, other AI startups eyeing IPOs will take note. To get a warm reception, they might need to moderate their valuation expectations and address any weaknesses up front. We may not get a sudden flood of AI IPOs, it could be more of a slow trickle, as each company's merit is judged individually. The broader market context, interest rates, economic outlook, and tech stock sentiment will also play a huge role in timing. If CoreWeave stock performs well post-IPO and the company hits its milestones, it could rebuild confidence and encourage more offerings. If it struggles, some peers might wait longer or explore alternate funding like strategic investments or mergers instead of IPOs. For investors, the overarching lesson is to stay level-headed. AI is the next big frontier, and it will likely produce the next generation of market leaders, but not every player will make it to the finish line. It pays to differentiate between a company riding a trend and one leading it. CoreWeave has a promising position as a provider of picks and shovels for the AI gold rush, and with Nvidia and other big names backing it, it's definitely one to watch. Yet its story also reminds us that even the backbone of the AI boom must convince investors of its long-term viability. As we look to the future, expect a continued dialogue between exuberance and caution. The AI revolution will keep advancing, and investment opportunities will come with it, but smart money will be looking for real substance behind the AI buzz. In the end, CoreWeave's IPO might be remembered not as an instant home run, but as a healthy checkpoint that ushered in a more realistic, mature phase of AI investing. And for stock traders and investors alike, that might be a very good thing. Overall, the takeaway is clear: AI is here to stay, but in the stock market, every story still has to stand on its own merits. CoreWeave's debut is just one chapter in that story, a mix of excitement, adjustment, and cautious optimism for what comes next. Check out our coaching program, stock alerts, and live streams to stay ahead of the crowd.